300, you don't see that often. Maybe once a season or once a year, usually you get a negative 300 or positive 300, and that's the time you change your tack big time. Let's go to the Wyckoff chart. Next chart is a Wyckoff chart. I'm not using Wyckoff indicators here. I'm just basically, or Wyckoff rules I should say, I'm basically just describing what other indicators I'm looking at. The Dow made an outside bar reversal, but more importantly we had a bit of easing on transportation. As you see here, transportation made an all-time high this week, and but it's been selling off since then. A good market will have transports and Russell involved. So let's go to the Russell chart. This is the Russell 2000 against NASDAQ. As you see again, also Russell had an outside bar reversal. So all in all, we're looking toward a pause here to the downside. Option X is next week. And when we talk about options, the most important thing in a Black-Scholes model, as you all know, is the volatility. So let's go and visit the volatility indices. Here we go. This is the VXO, which is the old VIX. I preferred that. So does the guy who invented it, Dr. Whaley of Duke University. And what we impose over that is our sigma channels, which is basically a 20-day moving average, +1, +2, +3, and -1, -2, -3 standard deviations above and below it. And you see how nicely it moves in this structure. You see where it stops. You see where it gets reversed. And look at what the high was on Friday. The high on VXO was 3 sigma, +3 sigma. We had an uptick in vol as expected as we move into expiration. These are the lows we haven't seen in years, 9.25, and obviously we bounced off of it. So I would encourage you to keep an eye on VXO and VXN using sigma channels, because it opens your eyes to where the market makers change their pricing, and as that changes, the sentiment on the floor for the fast money changes, and that always has the input into the overall stock market. Again, we had the uptick in VXN. The high was +1 sigma, and we closed at 20-day MA moving 20-day moving average, which is the same as 0 sigma. For the market to reverse, I would like to see it to hit 3 sigma, and maybe that's what we'll see in the next few sessions. So